Welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
And today we're going to look at, is there going to be a Santa rally? Which traditionally is great for the market. Vinny's going to analyze that a little bit. And also, because we are approaching the 200 average, I looked at the last 20 years of 200 average hits to learn something, where to go over it. It's kind of fascinating. Let's get into it.
Two Stupid Guys Trade Stocks.
So, in kind of summary total for basically what I think is about to happen here, is I think Jay Powell is about to just go ahead and take the Santa rally and out behind the woodshed and have it go bye-bye. Maybe we already had our Santa rally this week with the whole kind of Thanksgiving rally. Who knows?
I mean, that's a pretty epic thumbnail. I think that
Yeah,
we can all agree. That's pretty good.
pretty in love with this. I'm pretty in love with this. So, throughout history, people talk about this Santa rally, and then, it is very common that we have a tremendous kind of bull market up into Christmas. People are euphoric and optimistic that time of year and have something to look forward to. And then you also have kind of some, mechanisms where people are trying to front run, people loading their, kind of savings and retirement accounts for January. So, you have this kind of earlier and earlier push amongst these Santa rallies throughout the years. But majority of the time, you're talking about a 75% success rate that you did actually see a positive returns in the month of December, but not always. And in this year, I think in particular, we're not going to see it. It's so much ingrained that they have pictures like this on the internet where you actually have Santa on the floor of the New York Stock Exchange here. But yeah, so this is the year I'm kind of drawing from, and the left side here is my bets. This is kind of zoomed in on 2018.
Yeah, I was going to say, is that
2018 was
2018? Because 2018
yeah,
was rough.
yeah, exactly. That's the last time we had this kind of basically bear market resulting from Fed tightening is why I'm drawing this comparison. It's recent relatively in history. And this green candlestick here is actually Thanksgiving week that year. And then this big red candlestick that completely engulfs that. And then these next couple down are headed into Christmas over the next couple of weeks. This is a weekly chart here, Barge. Yep.
Yeah, I mean, that was also, I want to say that was it was almost like, it was like 8%. It was a big dip. It wasn't like a small dip. It was pretty hefty.
Exactly. And we were kind of nearing the end of the Fed market in terms of them increasing rates. They're getting ready to start kind of plateauing for a little bit, which is where we are probably in the cycle. We may be a little bit earlier than that this year, as in may still have probably 2 more rate hikes to go is kind of my suspicion. We have a Fed meeting this week. That's when Jay Powell's going to just, have that possibility to really move the market because he's, market's pricing in 50 basis points right now. If he were to go to 75,
It would
the
be
market
bad.
would not be very happy with that. However, I still think 50 is probably what happens. But anyways, these are my options plays. All of these things are what they call, this is a call credit spread, meaning I sold a kind of lower call and I bought a one that's a little bit higher strike price expiring the same date, and I collected premium up front. The reason why I did this particular trade is I'm looking for something that's like an asymmetric risk in that I personally took on, for each one of these spreads, which is a $10 wide spread, I took on about $2 to $3 worth of risk, meaning my maximum loss is $200 to $300 per spread. I have 3 of them here. And my maximum gain per spread is $1,000. That's the reason why I did it. But it's not exactly a high kind of likelihood success trade. But that was a trade-off I made.
But the risk to reward is pretty solid. Also,
Exactly.
when I go to mine here, this is just the most gorgeous dog in the planet.
Yeah.
Give us a like and subscribe. She sleeps on her dirt mound. And yeah, I made that for her. But what we're going to do is we're going to look at the stock market here. And Vinny, can you double check? I think the PCE numbers come out next week, but I could be wrong.
Yeah, exactly. Right before the Fed meeting. So that's the other kind of PCE numbers will give us a little bit of indication because Jerome Powell said before that's his favorite indicator of inflation rates. And then we have the actual Fed meeting itself.
Got it. So what we're going to look at, I'm going to try to do this quickly because there's a lot of hits. And I'm also trying to do this realistically because it's so easy to look at past graphs and be like, oh yeah, no, this would have worked out fine, right? In real time, that's not how it works. That's what a bunch of bullshit YouTubers do. right? They'll be like, oh, well, this is a double top. Well, no, it could have been a breakout. Now we know it's a double top. Anyways, this green circle here, this is meaning it worked. The stock market movement respected the 200 moving average. It either bounced off or only broke it for a day or two is what I'm looking for. I don't want to see it chopping all around the place because I know in real time, I'd be like, I don't trust this at all. This is scary. You also want to see when it breaks it, you want it to now become support. That's also a really good confirmation. And you want to see it break out on increasing volume or a triangle, which I'll show you. The red circle is, bull trap, or it's not bull trap, sorry, chop, impossible to read, no one would get it, no way. This slide is scary, and this is the scariest one because this looks like a nightmare, right?
Okay.
But this gray line, 200 moving average, you can see we never actually break it on any of these green circles for more than one day. So we broke it here, came back up, came back up, came back up. We never actually closed below it for 2 full days, with the exception of these 2 red circles.
Okay.
These would have stopped me out. I would have been pretty nervous about this. Here, we see it break, and then that 200 becomes resistance. We retest, we go down, we retest, bull market. This is February of 2000.
You mean bear market?
Bear market, yeah. This is February 2000, okay? So we're going to look at every time this hits, going all the way up to right before 2002. You can see beautiful rejection. This is a good example of the 200 moving average moving up, breaking it on decreasing volume. That's not what you want to see. This is market makers about to stick it to you.
Okay. It held it there for a while, though. It looks like there's a couple weeks where it's basically right above it.
It did, but remember, when you go through something, you want conviction. And when it retests, it just broke it multiple times. It's not ideal. It's not clean. But as we are approaching the 200 moving average right now, these are the patterns that we need to look at. This is going to be super important.
Okay.
This is a pretty solid example of what's called a triangle break, right? We keep on hitting peaks and then lower lows until you break out. Decent volume, nothing crazy, but then it just goes straight up. This is 03.
Okay.
This is trash. Right?
5 months of nonsense.
Yeah. And then another almost 2 months of nonsense. Not every strategy is perfect. Otherwise, we'd all be billionaires, right? If you were doing the strategy right here, you're screwed. I don't know how to read this. This is a nightmare. It did work perfectly right here, though.
Okay.
So this is right before 08. Once again, utter trash. Couldn't read that. I would have been stopped out. Fully admitting that. Beautiful hold. We broke. This is what's called a bull trap. So you would expect a retest and a bounce off. Look at how low this volume is on it breaking, and then how high it is on a rejection day later. Now, don't get me wrong. This would be so hard to read real time because I don't know these 2 big days are happening, right? If we're this day, I just see that we went up on abnormally low volume, the second lowest day in 2 months. That's how you can try to read a bull trap. It's always way easier in hindsight. It's not this easy. This is a beautiful little, oh man, that's just so
spinning
hot.
Top rejection right there off the
It's
200.
just-
Yeah, that is pretty sexy.
Jeez. This would have broke me 100%. We broke on low volume. We then did get the 200 moving average resistance becoming support, but this would have 100% throw me. Completely admit it. This is 2009 June.
Really? Okay.
Yeah, that would have thrown me. I didn't like the volume. Beautiful rejection, never closed. We went down it on full volume break. Again, only had 1 day above it. Came back down the second day. Same here. This is rough. So you can see that we're doing lower lows. I'm sorry, higher lows, meaning we should break it at some point. However, this is like a 4% gap up. This is a rough day. You can see that it's probably going to happen because of this and this, but you know, this would be a rough day, especially for people who are going short. And then it respected it here again.
Yeah, look at the volume throughout that entire time period too. It's pretty low and flat consistently across the board.
The whole time, yeah.
Yeah.
That would have been rough, especially a gap up day like that. That would have been tough. Now, right before 2013, you can see we break the 200 moving average, decreasing volume. We're only down here for 3 days, and then we have a higher volume breakup. This abnormally low volume, Thanksgiving. Don't look at this. If you look at the volume in the last week here, because we just had Thanksgiving, I think we put up like 25 million shares with an average of 80. It was nothing.
Yeah.
Good rejection there. This would have 100% thrown me. This is 2014. You can see how fast we dropped here. Once again, you don't know that this sexy hammer is coming, right? If you're here, you're going to think, oh man, increasing volume, this is a problem. I would have died here. Would not have worked. But, sexy example. Once again, touch after 2015. Couple more touches, rough gap down, 2.5 months of a nightmare. Absolute crap. Vinny, can you tell me where this is going to go in real time?
I mean, I don't know. That looks a little head and shoulders-y to me in hindsight here, but I don't know. In real time, that would have been pretty useless, I would say.
You know what the problem with Head and Shoulders is? You have to have the full Head and Shoulders to know that it's a Head and Shoulders, i.e. so much movement has already happened.
They're well past the ball at that point.
Yeah, stupid pattern. Here's a good example of a break and then becoming resistance. And I don't know what happened in this day in June 2016, but this is like a 12% drop in one day. I have no idea what this is. I'd have to look it up.
Yeah, don't recall, but that's pretty ridiculous.
Look at that. This is a whole 3 months worth of movement in one day. I don't know. I have no idea what it is. Beautiful touches. Rough gap up on insanely low volume. This is another bull trap. Look at these volume bars. It's lower than in the last entire month and a half. And then we have another beautiful projection for it down. This is COVID, you know. Is there many drops where there's low sentiment and then just immediate capitulation, just like it just happened the next day?
I don't know. That was a rapid and violent sell-off. Like I'm not sure if there had been any other in history that can really replicate that to quite the same degree.
Yeah, the whole thing took place in 2 months, and it was immediate. This is probably the best example for bulls. If you think that we're about to go up, what you want to see. You want to see a breakout and then use this 200 moving average as resistance and have it not go down. Once again, this is crap. This is early 2022. This is a great downwards triangle and then another beautiful hit. Now, if you just look at the 200 weekly moving average, it's a lot more clean because there's way less hits. Okay. I hate these so much. These are trend lines for the 200 moving average on a weekly chart. Once again, you can change the slope of this and make it look good. These are bullshit, but people love them. So here's where we are. We are approaching. I don't even need to move on my face, but I can show you. This volume's not real. This is not. It's not indicative of it being a bad move. It was a rough week, but we're approaching the 200 moving average, so we need to decide, is it going to be a pattern where we break through to show resistance? Are we going to break through on low volume? Not that low. That's insane. Or are we going to break through with conviction? If we break through with conviction, I'm going to be very sad because I have a lot of money on it. So The reason why I wanted to show all these examples is not every strategy is 100%. There's not one on the planet. Even I know, there's a lot of YouTubers that say that there are. It's not true. And everything is easier in hindsight. But if you be honest with yourself, be like, this would have made me fail. Shit happens. All we can do is kind of analyze the market with the best information we have. So.
Yeah, no, I completely get that. You just kind of have to do the best you have at that point in time. This is a very aggressive trade that I put on personally. I don't know. It was probably stupid, but we'll see how it works out at the end of the next couple of weeks. That's kind of like the time horizon where I expect this to play out if it does indeed go my way. But I don't know.
Sorry if this video is a little boring. I'm very thorough, so I wanted to give 85 examples of the trade working. So there we go. There's all of them.
Yep, exactly. So
Right.
it's December 1st is the next PCE inflation release date. That's what I was
December
looking
1st.
for.
Perfect.
Yeah. So,
okay. That's going to
by
be a
this
big
Friday.
day.
Yep, exactly.
If there is a 75 basis point move, see at the low, guys.
Yeah.
Gonna
So
happen.
FOMC is December 13th, 14th. PCE is this week, December 1st.
December 1st. Oof.
Yep.
All right, dudes.
All right.
Have a good one.
Catch you the next one. Yep.